Good morning to all. I'm not sure if we can just run through to the introductory slide, but thanks for having us. As stated, Pursuit Minerals is a more lithium-focused developer, where we are heavily focused on our Rio Grande Sur project and really building a top-tier lithium exploration and development company. Pursuit Minerals really has been a new entrant in lithium, having only completed the acquisition of this project, which was announced in December and then finally completed in March at the start of the year. So relatively earlier in our stages, but still relatively well advanced. The company is really focused on on this project, on the Rio Grande Solar, through a combination of factors. The project already sits within an existing NI 43-101 resource of 2.1 million tonnes. We've also got some quite active neighbours who have had some recent drilling success, with brine grades discovered from 800 to 950 mgli, which are some of the highest grades in Argentina, and getting quite close to some highest of grades in Latin America. Additionally, along with the exploration, we're very focused on progressing our production scenario, which we've done through optioning a 100-ton lithium carbonate pilot plant that we're in the process of completing that acquisition. We also have a very highly experienced board and management team. So if you can flick to the next slide, please. Just a bit of a corporate snapshot here. We're currently capitalized, we're at the start of July at about 38.8 million, just a little over 3 million of cash in the bank, and our board comprising of Peter Wall, quite well known in the resources space, a highly effective resources lawyer. Mark Freeman, who along with Pete were part of the structuring of and acquiring our lithium deal. Myself, and then Mr. Tom Eady, who is quite well known in the resources space. Very well known for his time as chairman of Syra Resources, which he was a founder of at a 15 mil market cap, and then in the graphite space took that over to a 1 billion market capitalization. So just going on to the next slide, please. Along with the board, we're also joined with Alejandro, who is our in-country manager. Alejandro is a very well-experienced lithium professional, having previously worked with Rincon Lithium in the development of their operation prior to its sale to Rio Tinto up on the Rincon Solar. Very fortunate that he's also an Australian, Argentinian dual citizen, and works quite close with me in dealing with a lot of the in-country issues. Next slide, please. So just a small snapshot on where we are. The Rio Grande Sur project is located in the Lithium Triangle, which is the triangle comprising of Bolivia, Chile, and Argentina. It's home to 50% of the world's lithium resources, with a lot of those now under exploration and development, with major companies showing significant interest. Argentina has elevated its status in the last decade, now with the third largest lithium producer behind Australia and Chile, and has the largest significant pipeline of new mines and projects in development in the Latin America region. Next slide, please. Looking specifically at Argentina, it's a very unique situation at the moment within the triangle. In the last 5 years, we've seen a lot of consolidation in a very limited number of areas. So the supply of real estate within the 16 salars, which we've labelled there on the slide, is becoming quite rare. So with Pursuit and this opportunity that we've been able to put together, the transactions will become increasingly harder in terms of finding quality projects. 17 salars exist within Argentina. There's a few smaller salt lakes which are not included, but of the main salars, we're seeing a lot of consolidation in the space. Most notably, Hombre Muerto has been very active with the merger of Livent and Alchem, effectively consolidating that salar. We've also seen recently, in the last couple of years, Pastos Grandes, which has been heavily consolidated now by Lithium Americas. So we're expecting these trends to move forward, especially within Argentina, which is very quickly becoming a tier 1 address. Next slide, please. Looking at the lithium market, there's a lot of talk around where the supply is going to come from to meet demand. Lithium in itself is in a structural deficit. A lot of focus is on the spot price, which has rebounded from that 20,000 per ton mark earlier in the year, increasing back up to the 44,000 per ton mark over the last month. But the realities of these projects now is lithium is a lot more understood as over the last decade, and these projects are not without their challenges, both hard rock and brine, in terms of actually bringing them on into supply. So the demand in terms of especially driven by the EV sector, is really pushing for new sources required to actually bring on a new supply for long-term contracts to meet the forecasted demand. Next slide, please. At Pursuit, we're seeing really three main drivers behind that demand, and there's a real talk, and having just recently attended the Fast Markets Lithium Conference in Vegas in the past couple of weeks, where a lot of industry players met. A lot of consistent themes are coming out, really driven by three main factors. The first being the price strength, which is mentioned. We saw the price rebound from the low 20,000 per ton mark up to the 44,000 per ton, really signaling that there was almost a price floor indicated. On top of that, the Chilean nationalization issue has been talked about a lot now, where Chile has announced they intend to take a 51% stake in projects of a strategic nature. So questions really remain over the hard or soft nationalization and the threat to supply that could come with the remnants and memories of the 70s with Coldeco being born out of the nationalization of the Chilean copper mines. And then on top of that, now we're really starting to see that the lithium market is becoming too big to ignore, especially from the majors. If you compare Vale's precious metals units EBITDA in 2022 at a total EBITDA of about $500 million. Comparatively, you've got the three majors being SQM, Albemarle, and what is the proposed Allkem Livent merger having an EBITDA of $1 billion. So for the majors now, we're starting to see a lot of activity in terms of where Rio Tinto purchased the Rincon mine. That was a sort of a signal of major entrance into the space, where the space is effectively becoming too big to ignore. Next slide, please. So a quick overview of our asset here at Rio Grande. We have a just under 10,000 hectare position on the Rio Grande Salar. That's about 50 to 100 kilometers to the west of the Hombre Muerto Salar in the space. The salar in itself, as mentioned, has a existing NI 43-101 resource of 2.1 million tons at 380 to 375 mgli. When we were putting this project together, it was a bit more advanced in terms of the exploration. We weren't on a greenfield salar where there was no resource. So for us, it was a very key part of putting this project together, where instead of looking and exploring for potentially lithium, we know there's lithium there. It's more of a quantification of how much. The resource in itself has only been drilled to about 100 meters below the surface. So as we're seeing now with some other companies that are drilling adjacent or where we intend to drill, who are drilling down to that 500-600 meter level, we're seeing two things, which is the lithium is continuing to depth, which is expected across a few of the salars with very similar geology for some of the neighboring salars, and also importantly the grade. For us, it was really positive to see a neighboring company achieve grades of averaging that 800 mgli, but importantly going to that 950 mgli intersection, which was about 2 kilometers to the west of our Mito tenement, which is the large tenement in the north there. Next slide, please. As mentioned, this is the NI 43-101 resource. As you can see, it does start to increase with some of that red grade. And this resource was done through two parts of exploration. One was in 2011 through a previous owner, and then LSC Lithium in 2018. Next slide, please. For us, these two maps were very key in when we put the project together. As mentioned, the Rio Grande Solar has been quite heavily explored. There on the left side, you can see the drill cores or previous drilling, of which some are very close in proximity and even on our tenement position there. In terms of the strike, it's about a 10 to 15k east to west across, and about 20 to 25 k's north to south. So a lot of historical information where significant drill grades had been intercepted in that 400 mgli. Comparatively, that's at a base grade very similar to the Rincon Solar, which is where Argosy, ASX AGY are currently developing their projects, and Rincon are, the Rio Tinto also developing the Rincon project. In terms of coverage, there's been quite a few drill cores, as you can see, and the drilling along with the CSAMT previously identified two key depositional centers which hosted a lot of the lithium resource, which for us, we're very fortunate that our tenements sit within those depositional centers. So from an exploration standpoint, it's not a greenfield exploration. This is more of a quantification exercise of knowing that there is lithium there, but identifying how much of that resource is on our tenement position. Next slide, please. Again, some of the historical exploration through the previous CSAMT survey. These cross sections are an east-west viewpoint from a north-south trend line. Again, you can, with the red borders, you can actually see the brine floating between our tenement boundaries. We were very fortunate, again, with the prior drilling. So within our main tenement, which is subject to an exploration program of our own drilling at the back half of this year, there were some really promising grades of that 395 to 391 on that tenement, and then also a twin core came with 361 mgli. So for us, we intend to drill quite significantly deeper, aiming between that 400 to 600 meter when we do our maiden drilling program later in the year. Next slide, please. As mentioned earlier, we have our Mito tenement on the northern side, which has very similar geological characteristics to where currently Grande is drilling on its Hombre Muerto West project. This project is not on this tenement isn't on the solar surface, but there are strong indications from adjacent drilling that the alluvial plain extends underneath the andesites and breccias where brine is present. As mentioned, an adjacent company, where you can see on that red circle, they were drilling to a depth of 600 meters and found significant brine intercepts, including up to grades of 950 mgli. So for us, when we come to drill this tenement, whilst it was originally purchased for infrastructure purposes, where we have space to position a plant and build evaporation ponds, this tenement in itself does have some exploration upside potential as well. Next slide, please. Again, these are some of the adjacent geological examples of that project. As mentioned, Grande Lithium in the side there. Arena Minerals had a very similar event where they weren't drilling on the main part of Pastos Grandes and found lithium, quite significant lithium to significant depth, 641 mgli at 620 meters to depth. So for us, the upside potential is clearly evident in the Mito tenement when we look to drill that. Not in our initial campaign. Our initial drilling campaign will focus on the solar tenements, but we will look to drill that towards the end of, the first half of 2024. Next slide, please. As mentioned, a key component alongside the exploration for us is the development of the lithium carbonate that we're looking to produce from this pilot plant. We optioned this pilot plant for acquisition that we're currently in the final stages of our due diligence and hopefully set to acquire within the coming months. This plant has a nameplate capacity of 100 to 120 tons per annum, very similar to AGY when they started their operation about 2018, 2017. If you go back through and look at the journey of some of our peers, many have started with a 100-ton plant and then moved that to either a 2,000-ton plant, which is in which Argosy did, or in the case of Orocobre, now Alchem, they went from a smaller pilot plant right to that 20,000 ton scenario. So for us, this is a very key plant where we aim to really focus on the production piece. Whilst the resource piece is obviously very critical, for us, the real value driver of this project is the ability to actually produce the lithium carbonate. For us, we've been working quite heavily with some tier one consultants who have worked extensively in the PUR on the development of various brines and the processing options. So for us, this plant, the intention is to actually have brine running through that throughout the course of this year, where we will have from our pumping wells or intended pumping wells at site, we'll be trucking brine down from the salar into this plant upon completion of its pending acquisition. So this plant is a real value driver in the terms of actually being able to produce lithium. Lithium projects are quite abundant on both the hard rock and the brine side. However, for us, we really see the value and the key differentiator in the production piece, which has been a key focus for us. Next slide, please. So currently at the moment, our work streams are headlined, and we're actually about to set to complete our TEM and CSAMT survey. The TEM, having already looked at some of the preliminary results, which should be announced to the market in due course, the preliminary field works are very consistent with what we've seen in the historical exploration, and I've identified some really solid drill targets, which we intend to undertake at the back half of this year. The CSAMT is currently ongoing up at the Mito tenement there. So for us, we've been quite excited and looking forward to the next stage, which is upon completion of the TEM and CSAMT to commence the drill program, which we're currently in the final stages of the environmental permits required for that workflow and work program. Next slide, please. So looking at our go-forward plan, it's quite an aggressive series of events. However, we're very well positioned to meet these deadlines, and very fortunate that there's been significant prior exploration on the salar, which allows us to move quite quickly and quite aggressively. We're focused heavily on the production piece from our pilot plant, but also looking at the commencement of our drilling campaign with the target of defining a maiden JORC resource towards the end of this year. Upon completion of the pilot plant acquisition, our intention is to rapidly bring that back online. The plant in itself has previously produced lithium carbonate from other salars in the Puna. So for us, we have a technical team working on adjusting that block to the Rio Grande salar, while simultaneously running the exploration program, which culminates in defining a maiden JORC resource. These events are what we see as the key value drivers, especially in the lithium thematic. Lithium in itself is in a very intense structural deficit, especially with the push of EV manufacturers and the IRA legislation from Biden. There's some quite ambitious targets which will require significant new supply to come on. So for us, we feel we're very well placed to meet the demand response, especially as we progress the project quite rapidly and quickly throughout the rest of 2023. Next slide, and that's, I think, it from me.
Perfect. Thanks, Aaron. Great presentation. As I said at the beginning, sometimes it's about looking at your watch list, looking what other companies are doing and thinking, maybe I'll just put this stock on and see. And certainly with a big news flow coming and a lot of work happening, Pursuit might just be that stock you want to put on the watch list. Now, we do have a number of questions. The first one is in relation to the salars. As you mentioned, it's a busy part of the world and there's a lot going on. How much do you learn by what's happening around you?
Quite a lot, to be frank. We've seen the evolution of the salars and brine projects really since 2008 when Rincon and Orocobre burst onto the ASX. We're very fortunate that there is a lot of technical and top technical development within Argentina coming out of some very well-known companies. FMC Livent has been around since 1987, producing in Argentina. So there is that opportunity in terms of project development to learn from others. However, a lot of the major technical consultants are very well staffed with some very key people that have worked on several projects. So there's a lot of experience and a lot of learnings that are coming from those around us as they progress their projects as well.
From an education point of view, how much education is needed to explain the positive elements of brine production?
Brine production, I think, really goes back to the genesis of FMC. I mean, if you look at FMC Livent, they actually moved away from hard rock production to brine production in the 80s, as it was cheaper, faster, considered more efficient to feed their Bessemer City hydroxide plant. I think brine has a very solid future against the hard rock projects. Not that they don't have their place. I mean, Greenbushes has and always will be one of the most amazing ore bodies that you'll stumble across in Australia. But having said that, the brine projects are on the lower cost quartile. They are cheaper and easier to explore in terms of, for example, you're not drilling within a 5-meter spacing for a measured resource. You're using a pumping well, as brine is a dynamic resource. So I think from when investors really start to understand the nuances and the really fine detail, you can see why SQM, Albemarle, the core of their lithium businesses being the largest producers of brine projects in the Atacama. Not without challenges. There is some geopolitical challenges naturally within Chile. The nationalization or the introduction of the nationalization legislation is something that a lot of people watch with concern. But at their fundamental level, the brine projects are quite exciting. They have the chance for rapid development, especially given the focus now of technology in terms of both conventional and DLE processing as well.
Just touching on that rapid production, and as you say, the potential is there to bring projects into production very quickly and very cost effectively. Is it a bit of a race? And you can be swept into that race. That as you said, that the brines are liquid, so they're not just all sitting in one spot. They do generally move around in a positive way. Is that the opportunity, being able to get to market as quick as possible?
Absolutely. I think that in terms of, if you look at the lithium market, majority of lithium is sold on long-term contracts. The spot price presents a lot of interest, but it really accounts for a very small percentage of lithium sales. If you look at the longer-term fundamentals required for the demand side, supply is needed. Both hard rock and brine projects need to come online. In fact, nearly all of them need to come online to meet these projected forecasts. So from our perspective, as mentioned with our pilot plant, we have significant interest from potential off-takers, as there isn't many plants that are actually coming online. Yes, there's a lot of exploration in the Puna there, and there's a few ASX companies, at Rincon, at Inhuasi, Pasitos, drilling. There's obviously the DLE piece, and you're either a believer or a non-believer. For us, we're continuing with the conventional processing, as we feel that's a right fit for where we intend to take the company. And that's our first and foremost priority in terms of the processing piece. However, DLE has its place. It is likely inevitable that someone will crack that. Sunresin in China has a 10,000-ton plant. There's a few French firms that are moving quite rapidly with, again, scalable plants. So from that perspective, the production piece is probably the most valuable and does present a significant opportunity in the brine space.
And similarly to the questions I asked, certainly Dean at Dreadnought, how much do your neighbours watch what you're doing? While yes, you're a small company, and if I go back 4 or 5 years, Grande was a small company in its journey and it was building out its profile. How closely do your neighbours watch what you do? And is there an analogy for you and potentially shareholders with what Grande and others have done?
Oh, absolutely. I think that we're really looking to replicate the successes of our neighbours. You look at both the neighbours in terms of the bigger side, and in Argentina, there's a lot of M&A activity from oil companies at the moment. Plus Petrol purchased LSC Lithium, and now you're seeing Tech Petrol looking to acquire a TSX company, Alpha Lithium, which has a spot on Hombre Muerto. Even within the space, there is significant opportunity for that re-rate, where you've seen, as you mentioned, Grande and both Argosy, they've worked their projects up the project development. Argosy now, obviously in the processes of its 2,000 ton plant into continuous production, the third producer on the ASX. And Grande obviously defining a near 8 million ton resource. So for us, we're looking to capture both of those elements on the resource side, looking for a significant resource, but also the production piece. Again, if you go back, AGY was a 350 mil market cap company when it started production from its 100-ton pilot plant. So for us, whilst we're small now, achieving those milestones allows us to walk the project up the value curve. And M&A in lithium is heavily active. We've seen the base rate of an EV for a salar such as Pozuelos and Rincon go for that 900 mil mark, with both Ganfeng acquiring Pozuelos and then Rio Tinto acquiring Rincon. So I think there's a lot of looking over the fence from a lot of people for various different reasons in the Argentinian PUR. And that all comes down to the fact that there's such limited real estate. Deals like Pursuit Minerals and its acquisition of the Rio Grande project. Finding on salar, prime tenements that would have historical exploration, it'd be very, very difficult to do, say, within 2-3 years from now. The real estate will be exhausted. We've just seen consolidation through Livent, Alchem in the space. And I think personally we'll see a lot more consolidation as there's only a limited number of projects. So, and demand is heavily outweighing supply for these projects at this point in the market.
And the $1 million question, well funded?
We are at the moment, but like everyone else, we have enough cash in the bank and several $1 million that gets us through our exploration program. Our burn rate allows us to get through these activities, but as a few of the others have said, we're likely to come back to the market in due course just to increase so we can continue adding value for shareholders. A lot of these programs, we're very fortunate that it's a little bit cheaper than a hard rock play. But having said that, we've got some exciting things that once we complete our planned drill program and acquisition of the pilot plant, that we'll want to continue doing as we walk the project up the value curve.
Thanks, Aaron. A great presentation. Thank you for getting up early. The sun's starting to come out for you there in Europe, but I do appreciate you getting up early and giving the presentation for Pursuit Minerals. If it's not on the watch list, maybe it should be. A well-funded, clear plan, great project locations, and clearly in the right neighbourhood. So, Aaron, thanks for your time.
Cheers. Thanks, David.